Hi everyone, this is our very first Facebook Live session. I'm joined today by Todd Amon, ATBS's President and CEO.
Morning.
Today we're going to talk about some of the ways that owner-operators can manage some of their biggest expenses. We're hoping to do a few of these to just help you guys run a better business on the road, make a little bit more money, and so we'll just go ahead and get started. So, Todd, why is this such an important topic in terms of managing expenses for owner-operators?
So today we're sitting here in the fourth quarter of 2018, and we're coming off of probably the best year we've had in trucking ever. And that means revenue's been really high. Drivers are running a lot of miles and just making a lot of money. And when you're in a time like now, it's kind of easy to forget about the expense side of the business because the revenue is so good. So you run faster than normal. And, when you're making more money, you just kind of forget about expenses. And so, good times like this don't last forever from a revenue perspective. And really what we think is we always know that things change in trucking and it's not going to be this fantastic forever from a revenue perspective. So when the table turns, we got to start thinking about expenses again. And we're not saying that the tables are going to turn in 2019, but it's always a good time to just remind us, to focus on the whole business, not just revenue, which is really what we've been doing all year. We got to also think about the expense side of the business. And so I think right now, it's a really good time to think about expenses so that we can be prepared for, when the tide changes.
Great. So let's start with fuel. So fuel is arguably the biggest expense for any owner-operator. Todd, how much do most drivers spend on fuel a year?
The average owner-operator, it's their number one expense. They'll spend somewhere between $40,000 to $50,000 a year on fuel, and that's a ton of money. It's definitely almost double the next biggest expense. And so owner-operators really need to think about managing that expense. And as I've said, in the last year, they haven't really paid a ton of attention to the cost side. So fuel's gone up really from last year in 2017 to this year. We've gone from $2.25 a gallon to over $3 a gallon. And, so it's a good time always to be thinking about managing the expense side on fuel.
Great. And then looks like, let's see, do we have a question? Oh, no, just a comment. So how can someone calculate their average cost per mile to figure out how much fuel they're going to spend?
So, you can look at fuel a lot of different ways. The easiest way to manage it, most trucks these days have just a digital readout or something. It'll tell you miles per gallon, and you want to pay attention, of course, to getting the better miles per gallon. But if you get a little bit more sophisticated, like the ATBS, profit and loss statements that we provide, we give you cost per mile on all of your areas. It's pretty easy to calculate cost per mile on fuel. You can simply take how much money I spent on my fuel for this year. So let's do a simple example. I'm going to drive 100,000 miles and I'm going to spend $40,000 on fuel. I'll take that $40,000 I spent on fuel divided by 100,000 miles, and that means I'm going to spend 40 cents per mile on fuel. Our average client right now is spending somewhere between 42 to 46 cents a mile on fuel, as an example.
Okay. We actually have a download that everyone can go find in the comments section. It's the top 20 ways that owner-operators can increase their fuel efficiency. So go ahead and check that out. There's a link to that in the comments. But let's move on now and talk about the next biggest expense, which is your truck. And then some of the big expenses that are related to your truck would be the truck payment, maintenance, tires. Can you tell us a little bit more about how to manage that expense, Todd?
Yeah, absolutely. As far as your truck goes, it's not a decision that you make every single day. It's a decision that you make one time, and it'll last typically for years because you get a truck and, you're going to be in a long-term deal with it. So I'd start off by saying we're in a time right now where people have made pretty good money the last couple of years, and a lot of folks are thinking about upgrading their truck, either buying a brand new truck or buying a newer used truck. When you go out and you buy that truck, you really need to not just go find the most sexy thing on the lot that you think, oh my God, I love that truck, I got to drive that thing down the road. Because sometimes, a dealer may have put lipstick on a pig, and it may be a beautiful looking truck, but it may cost you a ton of money from a maintenance perspective or everything else. So really, when you get that truck, you want to make a good decision and do as much research as you can. If you can get some maintenance history on it, take it to a shop and have them look through and do some fluid samples and really check things out and make sure you're getting a good quality used truck. Once you get into that truck, there's a lot of variables that are going to affect the money you're going to spend monthly on that truck. So, it depends how much money you're going to put down. Are you going to get into a lease purchase program where it's, minimal money down with the fleet, about $1,000? Or are you going to put significant money down, something like $8,000 or $10,000 down on the truck? How long are you going to finance that truck? Is it going to be 24 months or 60 months? Or you have a balloon payment at the end? When you think about all those variables that go into it, that's what makes up your truck payment. Today, on average, our clients are spending around $2,200 a month for a truck, whether they lease or they buy it. That's the ballpark for the average payment.
Okay. So let's go ahead and talk a little bit more now about, let's see, the difference between maybe leasing and having your own authority in terms of insurance.
Yeah, sure. Insurance costs are, definitely up there as far as costs go for owner operators. And so if I'm leased onto a carrier, insurance is pretty easy. There's really only 3 insurances that I'm going to be responsible for and need to worry about. And I can typically buy those through the motor carrier. First is bobtail insurance, which really, that's also referred to as non-trucking liability. So that covers me when I'm not under load and hauling freight. That's a pretty reasonable insurance. It costs somewhere between $30 to $45 or $50 a month. Next is physical damage insurance. And so that's going to cover my truck just like it would cover my car if I'm in an accident. It'll pay to fix that truck. It'll pay to fix any damages done to other vehicles or other property. And typically that physical damage insurance is a percentage value of the truck. So it's somewhere between 3% to 5% of the truck. Usually averages anywhere between $150 to $200 or $250 a month. The last thing is occupational accident insurance, and that insurance coverage is going to cover you if you're injured on the job. That's a pretty reasonable coverage. It's got some pretty low limits on it, but that's what most owner operators buy. That's going to cost you anywhere from $130 to $200 a month. So all in, those leased motor carrier, leased onto motor carrier insurance coverages are going to be somewhere between $3,000 to $5,000 a year. So you also asked the flip side, Susanna, what is it going to cost me if I've got my own authority? And you're taking a lot bigger step out there and you're taking more risks to actually run your own business. So if I've got my own authority, there's a few other coverages I've got to get. The biggest one is going to be liability insurance. You're now not operating under the fleet's authority. You're operating under your own. So you've got to have liability insurance. If you have a major accident and, people are injured, you got to have that liability insurance. That's a pretty significant expense. You also now have to have your own cargo insurance because you're hauling your own freight. And so you got to add on cargo insurance. You probably have your own trailer now. And so you're going to have some additional physical damage insurance. So you tie all those things together. One piece that you may also have to have, it kind of depends on the state, but you might have to go to workman's comp type coverage from occupational accident. Tie all those things together and it's going to cost you somewhere between $8,000 to $12,000 if you've got your own authority for insurance as opposed to $3,000 to $5,000 if I'm leased onto a motor carrier.
Okay, thank you. Let's pause for just a second to see if we've got any questions.
Susanna, while you're looking at that, I'm going to just touch on fuel again because we talked about fuel and how much it costs in total, but we really didn't talk about ways to save money on fuel. And, I know we've got some links on our website that we can tell the folks that are on the Facebook Live session about, but just a few things to think about. Again, we've been in an environment where we've been generating a ton of revenue, and I think drivers kind of forget about the expense side. The number one way to save money on fuel, and a lot of times drivers don't like to hear this, but it's all about speed. And when you're in an environment where there's a ton of revenue, drivers get used to driving maybe faster because they want to get to the next load that's a high-paying load, and it's all about getting delivered and hauling freight and those kinds of things. But if you actually care about managing your fuel costs, speed matters. And so the typical rule of thumb is for every mile per hour you increase, you reduce your fuel economy by 1/10 of a mile per gallon. So if we restate that in the positive, let's just say that I go from driving 70 miles an hour to 60 miles an hour on average. I'm going to save about $10,000 a year on fuel. So speed's important. Again, I know we've been in an environment where drivers care about revenue. They care about getting places quick, especially with the ELD mandate and hours limited. But again, when we get into the environment where you really care about your costs, think about fuel and driving a little bit slower. The second thing is idling. Idling costs money. The average truck will burn about a gallon of fuel per hour that you idle. So we're heading into the winter months. I don't expect you to sleep in your truck when it's freezing cold in the north, and 0 degrees. You need to idle your truck if you need to have heat, if you don't have an AP or something like that. But just remember, every hour that you idle your truck costs 1 gallon of fuel. And at $3, that's about $3 an hour. So let's just say you spend the night in your truck for 12 hours. That's about $36 that you just spend in fuel. Maybe you can do without idling it if you're in a moderate temperature or something like that. Another thing to really think about is just the way you drive your truck. And someone taught me this a long time ago. Every time I hit the brake, I'm actually using fuel, because at some point when I hit the brake, I'm going to have to step on the accelerator to use fuel to get back up to the speed that I was at. And so a lot of that goes into driving habits and how close I'm following the truck in front of me or the car in front of me. If I leave an extra truck distance or something like that and traffic slows down in front of me, I don't necessarily have to jam on my brakes. I can just gently let off the accelerator, and kind of lose a little bit of momentum, and it doesn't take as much momentum to get back up to speed. So again, the way you brake, the way you drive, driving habits have a lot to do with fuel economy.
Great, thanks for elaborating on that. Those are great tips. So the next big expense that a lot of owner operators may not even think about is how much it costs to have food and drinks and incidentals when you're on the road. What should owner operators do in terms of managing that expense?
I'm going to start off with something that is really important for owner operators to think about. You get the benefit of a great tax deduction called per diem expense. It's one of the most confusing deductions that there is, because you hear per diem and a lot of people don't know the rules about it. And it's really simple. It's IRS, code that says that an owner operator or a truck driver, owner operator that's on the road, can deduct $66 per day every day you're on the road. You don't have to keep track of your coffee and your hamburgers and the juice that you drank and the dessert and all those things. You can just simply deduct $66 a day for every day that you're on the road. I want to be really careful here, because that amount just went up as of October 1st of this year. It was $63 per day for the first 9 months, January through September of this year. And that's an important thing, because if you use a tax person that doesn't really understand truck driver per diem and they're taking lower rates, or they don't know of that change, you might lose $100 or $200 in taxes. So make sure you keep track of your per diem days in 2018 for the first 9 months and the last 3 months, because those rates are different. So, what does that mean really to the question that you asked, Susanna? And the first thing is that'll add up to a $12,000 to $15,000 a year production, which is pretty awesome. That's a significant deduction when you think about it for meals on the road. That doesn't necessarily mean you need to go eat T-bone steaks every night and spend a ton of money on food, because you're going to get that deduction no matter what. The IRS allows you to take it. So then the game becomes how can I minimize my expense on the road? And the smartest drivers we know at ATBS, the ones we talk to about how they make the most money, are the ones that go to the grocery store once a week and they stock up on food at the grocery store, at a Walmart or even a Costco or something like that. They might have a microwave in their truck and a refrigerator in their truck. So think about that. If I can buy my groceries for the week and eat for a week, for $100, maybe $150, depending on the kind of food that I buy, I'm going to spend $5,000 to $7,000 a year on food, but I actually get a tax deduction of close to $15,000. So again, it becomes a game about minimizing my expense, because the IRS is still going to let me write off that $66 per day. I don't have to spend $66 per day. My goal is to spend $20 to $30 per day.
Okay, so you did mention that the rate changed, but another thing that changed, and we do have a question from the audience, is whether or not company drivers can still claim per diem, and that did change with the Tax Cuts and Jobs Act, correct?
That's a really good question, Susanna, and it's really confusing. And unfortunately, what I'll tell you is the per diem deduction essentially went away for company drivers with the Tax Cuts and Jobs Act at the beginning of 2018. We take a lot of calls at ATBS to discuss this. We did a lot of satellite radio shows on Road Dog early in the year to kind of talk about this, and it's really confusing. Essentially, what the IRS did was eliminate non-reimbursed employee expenses. So that means if I'm an employee driver of a truck line, no matter what size, I no longer can deduct my per diem meal expense, that's $66 per day. There's kind of one loophole way around this, is the fleet can still pay me a portion of my pay in per diem. And so I guess, without getting too complicated in this session, one thing that we really would like drivers to understand is if I'm a company driver, I should look for a company that has per diem pay option, because it's going to save me money, significant amount of money in taxes, a few $1,000s. But me as an individual, I can no longer itemize on the Schedule A and deduct per diem pay as a company driver. Good news is, for owner-operators, it didn't change because they're a business, and so they file a different schedule, a Schedule C, with business expenses, and per diem pay is still considered a business expense for an owner-operator.
Great. So if you guys want some more information on this, we do have a couple of links here in the comments. One is for an article called Seizing the Per Diem Tax Break, where we go into all of this in more detail. And then we also have some tips for healthy snacks on the road, some information to help you eat as much as you can while you're in your truck and avoid having to go out and eat fast food while you're on the road. So a couple links there for you guys. Let's change topics a little bit and talk about, last but not least, taxes, which everybody dreads. What advice can you give owner-operators for managing their tax bill?
I think it's a great question, Susanna. I think a lot of drivers maybe don't think of taxes as an expense per se, but at the end of the day, if you live in America and you make money, you're going to pay taxes no matter what you do. You may be able to shelter those taxes through depreciation on your truck if you buy a new truck or something like that, but at some point you're going to pay taxes. And so to keep it simple from our perspective, and ATBS is in the tax business, we do over 15,000 tax returns a year. What we advise our clients to do is make sure you're on an estimated quarterly tax payment system, which means I've got to pay my taxes every quarter. The IRS requires that. If I don't do that, I'm going to pay a penalty. And so every April 15th, June 15th, September 15th, and January 15th, I need to pay my estimated quarterly taxes. What happens with most accounting firms that don't deal with truckers is they just do what the law requires, and they take the tax burden from last year and divide it by 4. So if I was an owner-operator last year and I owed $10,000 in taxes, my tax person is typically going to take that and tell me I should pay $2,500 each of those quarters. What we know at ATBS is that your income fluctuates a lot as an owner-operator. I may not have the best first quarter because things are a little bit slow. Freight's kind of slow, and then I get out and running in the second quarter and I make some money. And so, what we do at ATBS is actually measure your true cash flow because we're doing your monthly profit and loss statements, and we give you an estimated tax payment based on your actual earnings. So we're probably going to tell you a low amount if you had a slow first quarter, maybe $1,000, and then when things pick up in the second quarter, based on your profit and loss statements, we'll tell you, maybe you owe $4,000. So we kind of match your taxes with your cash flow, so you should have the money to pay the taxes. At the end of the day, your goal is to pay the least amount in taxes. And I can tell you there's a lot of change in the Tax Cuts and Jobs Act. And so whether you use ATBS or not, I recommend that you ask your accountant some very specific questions. We'll be doing a Facebook Live event in December, I know, early in the month of December, to talk about the Tax Cuts and Jobs Act and how you can save money on taxes. So tune in for that. But if you don't, again, see that or use ATBS, make sure you ask your accountant, how you can minimize your taxes based on the Tax Cuts and Jobs Act. At the end of the day, for a simple rule of thumb, most owner-operators should set aside about 25% of their net paycheck. So if I made, just in round numbers, $1,000 last week, I should set about $250 into escrow account so that I can make tax payments throughout the year. At the end of the year, we simply true it up. We file your tax return in April. We look at what we made in estimated tax payments. We look at what we owe. Those should be really close. Our goal is to get them within a couple $100, so there's no big surprise. I don't owe the IRS a ton of money in April, but at the same time, I didn't overpay. Most people like to get a refund from the IRS because that's what they're used to doing when they're employees. We don't like that at all because that's essentially an interest-free loan to the government. So we want to get you almost exactly to what you owe. And taxes are complicated, but that's why ATBS is here, because we love to help you with your taxes.
Great. So that officially concludes our session for today. If you missed the beginning of it, you can always watch it afterwards. If you want to ask some questions after the fact, go ahead and type those into the comment section, and we will do our best to answer them as quickly as we can. If you would like to give us a call, our phone number is 866-920-2827. We can help you with your taxes. We can help you live a better life on the road and make some more money. So with that, I think we'll go ahead and end the live session. Thanks for joining us, and we hope to see you again.
Thanks a lot, everybody.